So what we discussed is for total cost. Now I'm speaking about absorption costing. So, costing has two branches. Costing. So branches in the sense there are two types here. What like we are speaking under standard costing. Okay, we are estimating the cost. So absorption costing. Absorption costing. Marginal costing. So we are finding out the cost of the product. What this marginal costing is also called as variable costing. So under absorption costing, you will take direct material, direct labor, manufacturing overheads. In this, you will take variable manufacturing overheads as well as fixed manufacturing overheads. Under marginal, so this, if I take all this four, this is called product cost. What is this called? Product cost, because this cost I incur to make a product. Okay, these are directly spent, these are indirectly spent to make a product. Okay, now administrative overheads, selling and distribution overheads are called period cost. So period costs are taken in the statement of profit or loss as expense. Okay, in marginal costing or variable costing, we take direct material because this is of variable nature. This is variable. This is direct cost. Whatever we take, direct material, direct labor, these are variable nature costs. Why? Because these are available per unit wise. Direct material, for making 1 unit of product, I want 2 kgs of direct material. If I'm making 10 units of product, I want 20 kgs of direct material. If I'm making 100 kgs of product, I want like 200 kgs of direct material, right? And 1 kg, 1 kg product cost is 2 rupees. That means 20 kg will be 40 rupees. 200 kgs will be 400 rupees. So it is variable nature, but it is available per unit wise. And here I will take variable manufacturing overheads because the costing, what I'm considering here is variable costing. Under that, only variable nature expenses I will be considering, which are I'm going to spend for making the product. Fixed manufacturing overheads, whether even though those are manufacturing overheads, like administrative overheads, selling and distribution overheads will be taken as period cost. That means I will be showing them in the statement of profit or loss as expense. Okay. Okay. These are the major differences. Now, this was related to product. Now, product cost plus period cost is what, Faisal? Total cost. Yes or no?
Total cost. Yes, sir.
Yes.
Yes, sir.
Yeah. That is under total costing. That is when we find out the total cost. Now I have explained about the absorption costing. I'm taking direct material, direct labor, standard. It is standard direct cost. Variable production overheads. You get standard variable production cost of production. Fixed production overhead, you get standard cost. Okay. This is under absorption costing. This is called product cost, standard product cost. Okay. What we have taken? We have taken direct material. We have taken direct labor. We have taken variable production overheads. For manufacturing overheads, we have taken fixed manufacturing overheads, right? Now, fixed manufacturing overheads would always be, in total cost wise. Let's say factory rent. It will always be in total cost wise. That is like 10,000 rupees. How I can know, like per, how much factory rent has gone for making 1 unit, 1 unit of the product? How much see, this is the factory rent which is given you as a total amount. So the total factory rent what you're paying is 10,000 rupees. If I want to find out how much factory rent has been absorbed or how much factory rent I have incurred for making 1 unit of the product, how will I know that? So for that, I have to, divide this with the allocation base to find out predetermined absorbed factory overhead. How will I do that? As per the traditional costing, we will take two allocation base, that is machine hours and labor hours, correct? Yes, hello.
Yes, sir.
Yeah, so 10,000 rupees of factory rent I will divide with 1,000 hours of machine, or like 10,000, this is machine hours. 10,000 rupees of factory rent I will divide it with 1,000 hours, that is labor hours. So I will get 10 rupees per machine hour. That means 10 rupees of factory rent I have incurred if the machine is running for 1 hour to produce the product. Are you understanding, Faisal? 10 rupees of
Yes, sir.
factory rent has gone into spending if the machine is running for 1 hour to make the product. Okay, or
Yes,
10 rupees of factory rent has gone for the gone into the product cost if the labor is working for 1 hour to produce the product. Okay, that's the reason why we say 10 rupees for one labor hour, 10 rupees for one machine hour. Okay, so for one hour if the machine is working, the factory rent we are paying is 10 rupees, or for 1 hour if the labor is working, we are 10 rupees is the factory rent which we are paying, and this we are paying to make the product. Okay, now how will you set the, so that concept is covered here, Faisal. I will just take you that to that product, to that concept right now. So predetermined overhead absorption rate. So this is nothing but we are estimating how much overheads we have incurred to make 1 unit of product if we have been given total amount of the overhead, as I've taken 10,000 rupees as example. Okay, so the formula is nothing but, since it is an estimate which we are making, we are finding out the standard overhead cost for making 1 unit of a product. We will take the standard overhead or budgeted overhead. See, standard and budgeted, the terms what we are using may differ. How? If I speak about standard cost, it is always related to 1 unit wise. If I speak about budgeted cost, it is always related to total cost, correct? That means if I'm making 1 unit, the cost which I'm incurring may be called as standard cost. If I'm making 100 units, and the cost I'm incurring for making 1 unit of the product is, let's say, 10 rupees. That means my standard cost is 10 rupees. So for 100 units, how much I'm incurring? 1,000 rupees, right? That is called as what? Budgeted cost. What is that called?
budgeted cost.
So if you take standard cost per unit wise, that may be called as that, for that we will give the name of standard cost. If you are if you are see, pre-estimating the cost of 1 unit of product is standard cost. Pre-estimating the cost of the total units what you are going to make of the product is called as budget cost, correct? Yes, hello.
Yes, sir. Sir, once again.
So yeah, so I'm saying if you are estimating the cost of 1 unit of product, it's called standard cost. If you're estimating the cost of 100 units of the total products what you're making, then it is called as budget cost. What is that called?
Budget cost. Yes.
That's what the total standard cost is called as budget cost. Per unit cost is called as standard cost. Okay. So here,
okay.
Here the overhead was 10,000 rupees, which I have taken as factory rent, which was not for 1 unit, which was the total factory cost if I make total units. Are you understanding?
Yes, sir. Yes, sir.
Yeah. So I have divided this with what? Machine hours, right?
Yes,
see,
sir.
I am making, let's say I'm making 100 units of product, but I have the factory rent which is 10,000 rupees, which is the total factory cost, correct? It is not available per unit wise. Is it available per unit wise right now?
No, sir.
I am converting it. I am dividing it with allocation base. So allocation base is machine hours or labor hours. So this particular numerator figure is called budgeted overhead. What is it called? budgeted overhead. So my budgeted overhead is 10,000 rupees. That means my budgeted factory overhead. That means according to me, the factory cost what I'm going to pay is 10,000 rupees. That is what I have estimated, divided by, I'm going to, like, my machine is going to work for 100 hours, 1000 hours, let's say. So for 1 hour of machine which is working, how much factory rent I am incurring? 10 rupees per machine hour, right or wrong? Yes.
Yes, sir.
10 rupees per machine hour. Now, so now this is what is the per unit factory overhead cost. Okay. Now, if I want to find out overhead absorbed, so actual activity, what will I do? I will take how much? I will take what?
Actual, sir.
What is the difference between actual activity and the budgeted activity? See, I estimated that my machine should work for how many hours, Faisal?
1,000.
But let's say my
1,000
machine
hours,
is
sir.
but let's say my machine is working only for
8,000.
800 hours.
Okay, 800.
It can happen anything. It can work either for 800 hours or it can work for either 1000 hours. How much I estimated in actuality also the machine has run for those many hours, or the machine can also run for 1200 hours. Are you understanding? It can be anything, na?
Yes.
See, can you
Yes, sir.
you estimate the actual? No.
No,
You
sir.
can only estimate the standards. So in actuality, you want your machine to work for 1000 hours. That is the standard you have set. But the machine can run for any of these hours which I am mentioning. So if you want to find out the overhead absorbed, what you should do, you should take the actual activity or actual number of hours the machine is working into predetermined overhead rate. How did you find out the predetermined overhead rate? With this formula. What was the formula? Budgeted overhead by budgeted activity level. Correct or wrong?
Activity level. Yes, sir.
So according to you, the factory overhead should be how much? 10,000 rupees. But now you see, activity, the machine is working for 800 hours and predetermined overhead rate is 10 rupees. So how much is the cost? How much is the cost?
8,000.
How much is the cost which I got
Hello.
here? Multiplying these two. Multiplying these two, what cost I got, Faisal? 8,000 rupees.
8,000
Okay.
rupees.
Yeah. So my estimation was 10,000 rupees. My budget was of 10,000 rupees. And how much did I incur in actuality?
8,000 rupees.
That's what. Okay. So if you want to find out your overhead cost which you have incurred in actuality, how come you can find out? You can find out with the help of overhead absorbed. What? Overhead
Overhead
absorbed.
Yes.
Yeah. How? See, first what you have to do, you have to find out the predetermined overhead rate. How will you do that? Budgeted overhead cost divided by budgeted activity level. What does that mean? You estimated that the factory rent is going to be 10,000 rupees. Okay, or dollars. You can take anything. And you have estimated that your machine is going to work for 1000 hours. 1000 hours. So how much is your overhead cost? 10 rupees per machine hour, right? Yeah.
Yes, sir.
So according to you, the overhead cost should be how much? 10,000 rupees. Okay, and per unit it should be this much. Now, in actuality, the machine has worked for 800 hours. That is nothing but the actual activity level. What is that called?
Actual activity level.
Yeah, because what is important or relevant for you is actual, not standard.
Actual.
Standard is what you are estimating. Actual is what you are going to incur. Okay. Into
Okay.
how much hours? How much is the per unit overhead cost? So in actuality, 8,000 rupees. Okay, you will incur. That means standard cost for actual output. What is that? Standard cost for
Actual output.
how it is standard cost for actual output? This is the standard cost per unit or standard cost of overhead per unit. That is called predetermined overhead cost. Okay. So what is your, how did you get the predetermined overhead? By taking the budgeted overheads and budgeted activity level. So you got that
Activity level.
your per,
Yes, sir.
your per hour, per machine hour, how much factory rent you are going to pay? 10 rupees. This is what is your estimate. Okay. You
Yes, sir.
multiplied this standard with actual hours. You got standard
Actual
cost for actual, for standard cost for actual output. Are you understanding?
Yes, sir. Yes, sir.
Because your actual output is like machine is going to work for 800 hours and standard cost is 10 rupees. So this is what you have found out. It's called overhead absorb. Okay. So now what we are going to, just a second, we are going to find out something. 2 minutes. I'm putting the charger. Standard cost of overhead for actual number of hours machine has worked. Standard cost of overhead per unit actual outcome, okay, or actual number of hours the machine has worked. Is it right?
Yes, sir.
Yes, Faisal?
Yes, sir. Yes, sir.
Yeah. Now, see, we are going to find out something right now. We are going to find out the over absorption and under absorption of overheads. But before that, we will go for a concept about the standards. See, standard setting, whatever the standards you set, those standards should be based upon your past experiences, your capacity, or what you have been in actuality seeing since so many years. Let's say if you want to decide how much raw material you are going to take, definitely you will check how much you have been producing on an average, and based upon that you are going to estimate how much raw material you are going to use. Correct? Fine.
Yes, sir.
Hello? Yeah. So past experiences is what everyone follows to make the future estimates. So whatever the standard you said, it should be ideal. That means these are based on perfect operating conditions. That means you are not considering any spoilage, any inefficiency, any idle time of the labor, no machine breakdown. That means you are thinking that if everything goes as per your plan or everything is normal, then definitely you can set a, you can definitely estimate the standard cost. Correct? Now,
Yes,
whatever the standards you set should be attainable. You cannot set standards which definitely you cannot attain, or you cannot achieve beyond your capacity. Current, that means it should be as per the current working conditions. Basic standards are kept unaltered. See, some things are always kept, fixed. That means you are going to make, since 10 years you are making 1,000 units. How many units?
1,000.
So you keep this as basic. That's what. So the uses of standard costs, see, standard costs are very important to find out the cost of a product or for inventory valuations. Okay. And also it is very important for variance analysis. How? See, let's say the raw material standard cost. See, there are many types of variances you will be looking at. Let's say the raw material cost, what you estimated was 10 rupees, okay, per unit, and you are kind of making 100 units. So according to you, the raw material cost should be 1,000 rupees, right? Yes.
Yes, sir.
But when you really bought the raw material, it costed you 1,200 rupees. Is it good or bad?
Yes, sir.
See, what you
Hello.
estimated is raw material should cost you how much? 1,000 rupees. But when you
1,000.
really bought the material from the market, it costed you how much?
1,200. Yes, sir.
Is it good or bad?
Sir, it is bad, sir.
Yes, you're paying 200 rupees extra.
Yes, sir.
So that shows the variance. The variance here is adverse or unfavorable, right or wrong?
Yes, sir. Unfavorable.
That's what we, so that is only possible if you have standard cost. Otherwise, you can't do the variance analysis.
Yes, sir.
So standard costs are very important for decision making purposes. Okay, whether like if you know how much it is costing you to make the product, you will definitely decide whether to manufacture or buy from some other place for setting budgets and also for performance evaluation. Right now we check the performance evaluation, variance analysis, right? So advantages and disadvantages of setting standards. It helps for budgetary control, helps for making the budget, helps for performance measurement. Let's say you wanted the labor cost to be 1,000 rupees, but when you actually started the process, you are paying like, let's say you are paying 100 rupees to the 800 rupees to the labor. It is saving the cost, right? It is good. So your performance has been good. And assist the target setting for staff. It helps for price setting, because when you know the cost of the product per unit, you can add the margin and sell the product in the market. It helps in simplifying the bookkeeping process. Disadvantages: see, when you make estimates, it's very difficult to forecast accurately. Like whatever you predict, whatever you estimate is not going to be always true, or always the actual result is not going to be the same what you estimated. It's not going to come true always. It's a time consuming process, because you have to sit on that, and regularly you have to revise the things always, because you should always estimate by considering the current conditions. It can be sometimes very much demotivating if things go wrong, and it also can include existing inefficiencies. Now, I was discussing about over absorption and under absorption, correct? Just a second, Faisal. So here we have actual overhead. Let's say actual overhead is 100 rupees, and overhead absorbed. That means let's take that factory rent example. So we actually, the factory rent in actuality what we are paying is 800 rupees. Okay. And the standard cost of actual outcome, that means the overhead is 1200 rupees, right? Correct or wrong? Hello?
Yes, sir.
Hello?
Hello. Yes, sir. Hello.
This is actual cost for overhead of this. Let's say. So when the overhead absorbed is more than actual overhead, it is called over absorption. What is this called? Over absorption. It's called under absorption, right?
Over. Yes, sir.
Yes. Yeah, just make a note of this. I'll give you the time. So the difference between the overhead absorbed and actual cost or actual overhead, right? Actual overhead is as per the actual activity.
Yes.
Overhead absorbed is. standard cost for actual activity, right?
Yes, sir. Yes,
That means you took the standard overhead and that means you took the predetermined overhead absorption rate and you multiplied with the actual activity. Here we can see, not with the budgeted. See, actual activity into predetermined overhead rate.
yes.
So that means when your absorbed overhead is 1200 and your actual overhead is, let's say, 1000, right? Okay, I took 800, right? When your absorbed overhead is 1200 and your actual overhead is 800, your absorbed overhead is more than your actual overhead, right? So it is over absorbed or under absorbed? Over absorption, right?
Yes, sir.
Yeah. If the absorbed overhead is more than the actual overheads, it is over absorption. Of course, it is more. Your absorbed overhead is more, na? It is over absorption.
Yes. Yes,
That
sir.
means more cost you are incurring here, okay? And vice versa. If your absorbed overhead is less than actual overhead, it is under absorption, right? Next. Can you do this question? Yes, sir.
Yes,
So
sir.
this is your actual units of production. This is your actual overhead. So actual overhead for actual output. This is your budgeted units of production, budgeted overhead. So first we'll find out the predetermined absorption rate. It's going to be
Yes, sir.
100,000 divided by 20,000.
24.
Going to be $5. Okay. Then overhead absorbed for the period. So what we will do? We will multiply.
Actual.
We have 1,17,000, right? This is actual
Yes, sir.
overhead. Yeah. And we will take that overhead rate. The overhead absorbed.
Yes, sir.
What is your overhead absorbed or your standard cost for actual output? It's 1,20,000. So overhead absorbed is more. How much is the over absorption? 3,000, right?
Yes, sir.
Hello. Yeah, and the
Hello.
overhead absorbed is how much? Yeah, hello, Faisal, tell me. Hello.
Sir, the screen get
Are you able
blank,
to hear
sir.
Faisal? Hello.
Yes, sir. But I can't see the screen.
Just a second. You can't see it till now.
Yes, sir. Now, just now, sir.
Can you see now? Hello.
No, sir.
Okay. See, your predetermined absorption rate is what? Your predetermined absorption rate is $5, right? How? Budgeted overheads by budgeted units of production or activity level. So this I have written here. What is your overhead absorbed? Your actual activity level into actual
Predestined. Yes, sir.
activity into predetermined overhead
Overhead.
absorption rate, which is $5. So 24,000 into 5 is 1,20,000, right or wrong? Yes. So how
Yes, sir.
much your overhead absorbed is more than actual overhead? 3,000. So over absorption.
Yes, sir.
We'll check the answer. Activity 1. Okay. Now, we will take up the last topic of this, that is the budgets, flex budgets. Now, see fixed budget and flexible budget. See, fixed budget is nothing but you are keeping the things fixed. That means whatever you're planning should happen in some amount of, let's say, 100,000, right? That means the total cost should come to 100,000. Are you understanding? Hello?
Yes, sir. Hello.
Yeah, that means when you are doing the production, when you are producing in your factory, your direct material, direct labor, manufacturing overheads all together, when you find out the cost of the product, it should be just in 1 lakh. Whatever it is, it should not go beyond 1 lakh. You're keeping all the things fixed. Okay. You don't want any flexibility. You want to keep things fixed. But in flexible budgets, it's not like that. You like what you are saying is the cost can be around 1,20,000 or the cost can also be around 80,000, right?
Yes.
That is keeping the flexibility. What's it called?
Flexibility.
Flexibility. That's flexible budget. Okay. Now we will see an example.
Excuse me, sir.
See here. There is a budget. These are the actual results. Budget is estimate. Tell me, Faisal, are you finding it like, are you not able to see?
Yes, sir. I'm still not able to.
Hello.
Hello.
Are you able to see?
No, sir. No, sir.
Faisal, are you able to see or not?
No, sir. Yes, sir. No, I'm not able to see.
I think there's a network issue. Just a second. I'll just call you 2 minutes.